Welcome to the Soya Investing Channel. My name is Colin, your average investor searching for above average returns. Today's topic is about Fairfax India, not Fairfax Financial, the parent company. We're talking about the one that's the smaller version, which they own a percentage of, Fairfax India, which strictly focuses on Indian up-and-coming companies. So let's get to it. Fairfax India is worth $1.7 billion, okay? But what's interesting to note is that if you look at the book value of Fairfax India, okay, the book value is worth $19. So it's the price of the shares right now is below what its net asset value. If you look at the 2021 annual report, it IPO'd in 2015 for $10, and then in 2021 it closed at $12.61, but the book value is worth $19.65. The total net asset value is worth $3.5 billion. So $3.5 billion, but it's selling for 1.7. Okay, so let's do a deep dive and let's look at these investments. So here is the breakdown of Fairfax India's companies they've invested in. Some of them are private and some of them are public. This is the amount they invested in, and then this is what the value of it as of December 31st, 2021. Okay, and let's go through each one. So if you look at the first one, this is the first ones they started off with, NCML, and this is one of their worst investments because it's the only one that's actually losing money. If you look at the website, National Commodities Management Services, they're a post-harvest solution. So if you grow something and it becomes seed, basically they take care of all the solutions, whether it's storage, preservation, procurement, finance, testing, inspecting. They take care of the whole process. And if we look at the 2015 annual report, the reason why they bought this company is because they thought there would be a massive opportunity because 80% is controlled by the government and only 5% by private companies. And NCML is one of the biggest ones. And due to deregulation by the new Moody government, they thought they saw an opportunity. Okay, so which is one of the reasons why they invested. But if you look at the annual report, 2021, they actually still had a loss of 9.4 million. This is because of the pandemic and other factors. So far, this is the only one that hasn't been doing well. So they lost more than 50% of their money, but they're still in it. So the next one on the list is Iifl Finance. They bought at the end of December 2015. Okay, if you look at the annual report in 2015, they bought it at around 195 rupees. So they bought it at this price. It was skyrocketed up. And then by the end of it, they actually split into 4 companies. Iifl Finance, the home loan, gold loan, business loan. Iifl Wealth, which manages money for the wealthy, and Iifl Securities, so trading for stocks, ETFs, mutual funds, and then the do-it-yourselfer, 5 the discount brokerage firm. So by splitting into those 4 companies, it put a 312 investment, and it's approached almost 700 million. So that's a 19% return. And if you look at the stock market, you have a P of 9 here. You got a 5% yield, P 29, 5 PISA, P is a little bit higher. But these 4 companies are on the stock market and you're buying it below book value. Next one on the list is Fairchem Organics. This is one of their best investments. They took $29 million and turned it into 45% compounded rate of return. This was bought on 2016. What it does, it's Iifl Chemical Company. So basically it takes the plant waste and the animal fats and they can turn those chemicals into products like soaps, detergents, personal care, plants, and other products. Okay, and some of their key customers are Archer Daniels Midland, Cargill, some certain big companies. The company itself is very small. The sales was only 26 million at the time of purchase when they bought it. It's one of their best investments that they've had. The next one on the list is Sanmar Chemicals. That is one of the largest PVC companies in India. They bought a big stake in that for 199 back in 2016, and now it's worth 420, another 17% compounded rate of return, which is really good. And they also have National Stock Exchange of India. They bought in 2016. Now they were supposed to get 5% of that, but word got out, so they only were able to get 1%. Word got out that it was going to be a IPO, so the other side backed out, so they only got 1%. But look at the return on this one; it's really good. They also have Sriracha Freight. This is a freight transportation company. Well, it's a very small company. They work under this Mandra port. I believe they have like a close to 15% of the share in that port. And it's a very small company. The revenue at that time, they only grew 18 million. They like buying small companies too. The next one is their crown jewel, Bangla International Airport, and they bought in March 2017. Okay, really big investment. And as you can see, it's been a really good return. Okay, and this is again still private. They bought it. They're supposed to go IPO this year. Okay, and same with also the National Stock Exchange. They're supposed to go IPO. With this airport, it is the 4th largest airport in India. Okay, so this is their crown jewel. Unfortunately, because of the pandemic, revenues and earnings hasn't been as stellar, but now things are recovering and it's about to go IPO, so it should do very well. Then the next one is their bank that they bought in 2018. This one also, they bought it during still a private company, and now I believe it is public. You can see it here. You know, PE is only 10. And then various couple other companies that they have. Okay, and still, you know, just recently still has a good return. So overall, the total here is 17% compounded rate of return overall. Okay, and even if you read it here, it says the book value of Fairfax is $19.65, but they believe that the intrinsic value is far higher. In fact, the last 4 years they bought 191 million, they bought at the price of $13.26, and then they bought another 7 million for $14.90, and that was like 105 million they spent. And then even this year, they spent year to date, you know, $24 million at $12.65. So they're continually buying because they know that the value is worth far more than this price. So the last point I like to make is the performance fee, because there is a performance fee for Fairfax India you have to pay. So it's based on above a non-compound 5% increase each year from the book value since inception 2015, and it's a performance fee of 20%. It may seem like a lot, but if you look, this is every 3 years they calculate this, and so far 2017 they paid 114 million, and then they paid 5.2, and as of 2021, okay, it's not finalized yet because it's still due ending 2023, but 84. So if you add those together, based on the asset value, it's 3.5. If you take it, you've only paid over the last 6 years 6%. This is not compounded, so that's not really a lot. And the good thing is that if you are a shareholder of Fairfax, the parent company, that money actually gets deducted and given back to Fairfax, the parent company. So it's really a non-event if you're a shareholder of Fairfax, the parent company, which I am. So it doesn't matter to me. Yeah, so I hope you like this video. I hope it give you an in-depth look of Fairfax India. This is by buying Fairfax India, you get the below book value, you get to participate in the Indian stock market, which is an emerging market, into the ground floor opportunities of private companies. Some of them are startups and some of them are well established, like for instance the airport, which is going to IPO this year. So yeah, do your due diligence, and I hope you learned something, and I'll see you in the next video. Thank you for your time.